Namaskar. Let me first thank Sri Sundaraman Ramamurthy for choosing to have me here. My first formal occasion to be in the BSc. My colleague in the Council of Ministers, Dr. Sri Pankaj Chaudhary ji, Chief of SEBI, Tuhin Kanta Pandey ji, and all the stakeholders in the BSc's future, invited guests, and elite of Mumbai's financial domain. I'm indeed very happy to be here, very proud to participate in this 150th celebration, a very steady journey of 150 years that the BSc has had. And let me upfront start with wishing the BSc several 150 years more and a bright future. And it is your service to the nation in terms of holding up the markets and also giving a very influential sentiment to impact the Indian economy, which is going to be looked up to. And therefore, my good wishes that you succeed, prosper, and make an impact on India's wealth creation. It's a great matter of pride. And also, both the speakers before me have mentioned as to how under a banyan tree, the Indian, rich in Indian symbolism, a banyan tree prospers, has several roots, aerial roots as well, provides shadow and shade for the birds and animals, and it is seen as that which grants your wishes. The BSc's growth has been so symbolically associated with that one early visionary group of people sitting and meeting under it, which has brought it to this far into the technology-driven age. But that has a story also, because it is only those informal but yet very effective meetings, bringing together of minds, which have come up with great institutions such as the BSc for India. It didn't require big hallowed areas or portals. A common man's everyday tree has really grown into such a big institution, is something which is so aligned with the Indian ethos, and therefore I think this augurs well to lead us towards Vikasit Bharat as well. I in fact congratulate and thank the entire leadership of and the employees of the BSc, all past and present, and to every investor, entrepreneur, and policymaker who has contributed to this incredible, steady journey of the BSc. The historical significance has been narrated both by the chief of SEBI and also my colleague. I need not elaborate on it, but it is worth recalling because it's the 150th year, it's a historic time, and for a stock exchange which has existed before India's independence, made its mark even during that time under the British rule. The imprint of the banyan tree installed outside this venue also resonates that transformation which I referred to a minute ago. I was surprised to hear, and I'm very proud to note, that the BSc has a capacity to process 1,500 crore orders per day and to manage even peaks of 14 lakh orders in a second. That is where a traditional, nearly 150 years as of today, institution, 150-year-old institution, has utilized technology to transform itself so much that the numbers match India's population scale, and for the world, which is advanced, which has seen all the stock market booms and busts, today looks up to the Indian scaling that the BSE has achieved as remarkable. So these are not small numbers. 14 lakh orders per second and 1,500 crores orders per day is not small in number. And I was just sort of looking at further breaking down this number. The average time taken to complete a transaction is less than 200 microseconds. If all this matters for a stock exchange, it is so important that you have stood up to the challenge of technology, and the benefits are accruing to all the shareholders in this stock exchange. And therefore, this is a beautiful journey of the financial sector, and this is all pervasive, and that is why I think it has a story of its own. 150 years is important, but together with it, the kind of milestones that you've achieved are very important. Much like the Wall Street, in the US, Sensex BSE's benchmark, the benchmark index of 30 top companies, is the sensitive pulse of the Indian economy, and that is there for everyone to recognize. From its start at around 550 points, that is in 1986, to touching a high of 80,000 points in July 2024, it has mirrored the resilience and the growth potential of the Indian economy itself. So I think this is a barometer to show where Indian economy is strengthening, where it is moving towards, and therefore, even as we celebrate 150 years, we are celebrating how you mirror the growth potential of the Indian economy. All of us would have been familiar with the acronym VUCA. It is a VUCA world. It's full of volatility, uncertainty, complex and ambiguous paradigms which are shifting every day. One thing stands firm: the strength of the Indian economic fundamentals and the macroeconomic prudence with which the economy is being managed. We offer investors, who are the nerve centers of a stock exchange, we offer investors a combination of policy stability, growth, governance and innovation, macroeconomic policies, prudent policies, and democratic institutions and youthful dynamism. We have recognized the shifts which are underway when we presented the budget for 25-26. It had outlined a clear roadmap focusing on key priority areas, including agricultural productivity, rural development, inclusive growth, manufacturing, support to MSME, employment generation, innovation, energy security, and export promotion. We firmly believe that the most effective path to building economic resilience is to foster domestic efficiencies and competitiveness. India is confident much later than the COVID, now after the COVID, because of the calibrated approach that we took. India is confident that we will navigate these global disruptions with policy agility and long-term vision. Our focus remains firmly on building robust domestic foundation, and the foundation is laid and strengthened through infrastructure development, inclusive growth, and deeper regional cooperation. These are not just buffers, external buffers to external shocks, but accelerators for our long-term growth aspirations. And I think the role of the capital markets in India's growth story has never been more important than it is now. driven by a strong regulatory architecture, and we have the SEBI's chief here. So driven by a regulatory architecture which is strong and enabled by reforms such as dematerialization, T+1 about which the SEBI chief spoke, T+1 the settlement, direct market access and mutual fund penetration, India has built one of the most robust market infrastructure in the world. For a moment, I'll take an aside. Only a few days ago, I was in the UK trying to be a part of the economic and financial framework that exists between the two countries, which happens every year. We meet once in Delhi, once in London. Even at that time, one of the full-time members of SEBI, Varshney, was there. He's here before us today. The moment I mentioned T+1 settlement, you could see in the face of all the British representatives, they were aware of it, but you could see in the face of each of the representatives a pleasure to hear such a kind of a technological advancement that you have implemented. Equally, a tone of disappointment that they have not reached that level yet. So it gave me immense satisfaction to sit in London to tell them that we are far better than them in terms of dealing with the stock markets. So that's a very recent memory that I have experienced, so I thought I should put it before you. I could see it in the highest of decision makers in UK, that T+1 is something which is like a pole star, which they are yet to reach. So congratulations on that as well. FY25 capitalization of India's stock markets crossed $5 trillion mark for the first time, making India the fifth largest capital market globally. Over the past 5 years, our indices have delivered an impressive 131% dollar-adjusted return, the highest among global peers. Marking it at when you're 150 is something of a great sweet pleasure. I think that goes immensely to the BSE's credit. Congratulations on that as well. India's weight in the MSCI Emerging Market Index has tripled from 6.3% in 2013 to 18.5% in 2025, reflecting strong global investors' interest and our rising influence in the global financial ecosystem. Today, with a combined market capitalization of over 400 lakh crore, the BSE stands among the world's top stock exchanges, empowering businesses, startups, and industries to scale and innovate. The logo, released for the celebration of the 150 years, today signifies prosperity, vibrance, growth, and new beginnings, besides emphasizing continued trust and enhanced responsibility. So I think to commemorate the 150th year of this successful journey, it gave me immense pleasure to launch the BSE India 150 Index today, which will capture our growth story, our drive to innovate, and our structural innovation, evolution as well with growth. The silver coin that has been issued out today also honors the BSE's incredible journey. I also appreciate the BSE's CSR initiatives, which show that you still give back to the society that which has recognized your excellent performance. And those were also initiatives which underline your commitment to education, health, green energy, and community well-being. I appreciate your efforts on those scores as well. Today, I also want to speak a few words, not just of where we are, but of where we are headed to. India stands at a defining point in its economic journey. We have moved from the world's 10th largest economy in 2014 to becoming the 5th largest, and sooner we will be the 3rd largest with all our efforts. I look forward to that day because it would mark the high watermark where India can reach purely on the back of it, the efforts of our own institutions, and it is thereafter that the efforts will be much more required towards maintaining and moving upwards, which can become very, very challenging. To reach third position itself is of immense pride, but to sustain ourselves there will require a lot more planning and taking ourselves forward. We recognize that the global landscape is changing and changing rapidly. And the world is going through a phase of trade calibrations, about which I don't need to talk in detail. The recalibration efforts on trade are very, very challenging. I wouldn't say it is worrisome, but it is also going to be very challenging. The intensification of tariff wars and the rise of protectionist policies have the potential to disrupt global supply chains, increase production costs, and create uncertainty in investment decisions across borders as well. This has had a ripple effect on the financial markets across the globe and including our own market. Over the years, the number of companies with a stock market capitalization of over 1 lakh crore has increased steadily, rising from just one in 2000, that is a year, and to 30 just before the pandemic, and then rising sharply to 81 today. So I hope I don't need to reinforce the significance of this one achievement. The number of companies with a stock market capitalization of over 1 lakh was just 1 lakh crore was just one in the year 2000. It rose to reach the level of 30 before the pandemic. But then today it is at 81, and that is a very big thing for an emerging market country. There are at least 55 companies today with over 1 million investors each, from a little more than a handful of just 7 in 2014. So it is spreading. The retail investors' participation is also so significant in the last few years. This increase over the last 2 decades is a reflection of India's strong economic fundamentals, implementation of crucial reforms, and also a steadily growing investor base. India's financial markets have shown remarkable resilience despite recent global uncertainties. Testament to this is the fact that in the second half of March 2025, just a month ago, foreign portfolio investors made substantial investments in India's financial sector, channeling over 17,500 crores into financial stocks. And this is in rupees, 17,500 crore rupees. Simultaneously, domestic investors, particularly the institutional investors, have played an increasingly central role. In the last financial year, DIIs, the domestic institutional investors, recorded total inflows of 6.1 lakh crore, far outpacing the 1.3 lakh crore net outflows from FPIs. This transition of DIIs from a supportive to a dominant force underlines the growing maturity and depth of India's capital market. And I think this happening in the 150th year of BSE marks a major profile, impact-changing profile to the Indian stock markets. So the DIIs are no more just being supportive, but have now taken up the role of being a dominant force in our markets. Our equity markets have also seen unprecedented primary market activity. I'm sure most of you all here know most of what I'm saying, but I take this as an occasion to recall how the characteristics of India's stock market itself is changing and changing for the better. for inclusion, for financial inclusion, and for also the spread of well-being and prosperity through wealth creation, which is reaching everybody. Our equity markets have also seen unprecedented primary market activity, which I said a minute ago. Over the past 5 years, the number of domestic IPOs surged threefold, from 106 to 320, culminating in a record equity issuance of 4.2 lakh crores in FY25, twice the amount raised in the previous year. Notably, India became the top country globally in IPO volume, surpassing the US with nearly double the number of listings. I think that deserves a hand. This reflects the growing preference for equity-based financing and the strong trust placed in India's economic prospects by both the domestic and international investors. We are all committed as government and also the markets and so on. We're all committed to the goal of financial empowerment of our citizens, regardless of geography or gender or income class, by providing the opportunity to participate in and benefit from the growth of our financial ecosystem. For this, we have carried out manifold reforms in the financial sector and innovatively used technology to achieve financial inclusion at scale and foster transparency, better and faster service delivery, and promote ease of participation in financial markets. This has certainly got reflected, and I would like to again say something which you in this audience may already know and recognize, but I take this opportunity to recall this. This is reflected in the strong retail investor participation in the capital markets. Our markets added a record of 4.1 crore demat accounts in February 25. I appreciate the Indian retail investor for having kept their trust in our markets, and that is why this number is increasing in this kind of a significant way, bringing the total number of demat accounts to 19.2 crores. I really appreciate how the retail investors have placed their faith in the markets today, and they are doing their own homework. And I'm sure the financial awareness campaigns are all paying off. But the better governing companies, or governance where the corporate governance are very good, companies where their performance is transparently laid out, and when MCA's records are constantly being read by people, you know that the interest which the retail investors have taken to come in a big way into the market is very well informed and not a rush into the market thinking they're going to mint gold. So this is an informed move of the Indian retail investor from just depending on bank fixed deposits to taking a bit of risk and coming into the market, because the transparency element in corporate governance has given them a chance to learn better about companies and choose to invest in them directly or through the funds. Notably, the number of new demat accounts added each financial year now matches the total number of accounts that existed before the pandemic. The median age of Indian investors is 32 years, with over 40% of them under the age of 30 only. And one in 4 investors today is a woman. I'm so glad to give you this data, because the youth and women are the ones who are placing their trust and faith in the stock markets, and it is that which we have to carefully nurture, and any small omission or commission will shatter this newfound faith, because this faith has given us strength. We need to nurture it. The mutual fund industry has played also a very pivotal role in fostering financial inclusion, with assets under management more than tripling in 5 years from 22 lakh crore to 65 lakh crores. In just 5 years, the number of unique mutual fund investors has grown from 2 crore to 5.4 crores. And the majority of these assets are held in equity-oriented schemes by individual investors, reinforcing the grassroots strength of our financial system. To this end, we are also expanding investor education through SEBI, through AMFI, which is the Association of Mutual Funds in India, simplifying KYC, which is a constant work being done by the Finance Ministry, but in trickles, many measures are coming to simplify KYC and onboarding processes via Aadhaar-linked verification and strengthening grievance redressal mechanism. We are actually enabling retail participation in government securities and promoting stock exchanges, which are social stock exchanges, to channel capital towards the not-for-profit sector. So our vision for India's capital markets extends beyond scale. We are building markets that are inclusive, accessible, and resilient. As we look ahead, we envision Indian capital markets that are, I'd like to just put or bring to your attention 4 specific things which I'm looking at when I'm looking at the growth of the markets and Indian economy. So as we look ahead, we envision the Indian capital markets that are deep and diverse, globally integrated, digitally secure, and sustainable and inclusive. I don't need to elaborate on each one of them, but deep and diverse is with a broad range of innovative instruments and a wide variety of participants, investors, and those who mobilize capital. When I say globally integrated, I mean with seamless participation by all classes of domestic and foreign investors at a high speed and large scale. And when I say digitally secure, adoption of robust cybersecurity measures with due care to data privacy. And when I say sustainable and inclusive, I mean serving one and all, including MSMEs, women entrepreneurs, rural investors, and social enterprises. So I think there is a very big role for stock exchanges. As a crucial part, the stock exchanges serve as a more as just a trading platform. They are the first line regulations. At the same time, they need to balance the cost of compliance with such regulations and enable innovations and informed risk taking. I think to truly democratize investments, stock exchanges must continually innovate and design products that are accessible, understandable, and aligned with the risk appetite and saving behavior of our citizen, whether through retail-friendly indices, simplified ETFs, or platforms for long-term SIP-based investing. The goal must be to make capital markets inclusive and rewarding for all strata of our society. In a rapidly growing market, with increasing retail participation, investor education becomes very, very vital. Investor awareness programs in regional languages should be conducted across urban and rural areas, particularly focusing on students. Now that I've told you the average age, particularly focusing on students, senior citizens, women, rural investors, and first-time traders. So without taking much of your time, I want to underline that India stands at a defining moment amidst rising global uncertainty. The world is looking towards us, not just for our impressive growth trajectory or demographic strength, but for the example we can set as a nation that leads with integrity, inclusivity, and innovation. Capital markets are not merely financial instruments, they are a reflection of our nation's maturity, economic maturity, and democratic spirit. So as we stride towards becoming Vikasit Bharat by 2047, which is not too far away, just 22 years more. Let us ensure that our markets mirror the very best of India, resilient in adversity, adaptive in transition, and equitable in opportunity. So let me end with a message to all stakeholders in this vibrant ecosystem, to our market intermediaries and exchanges. I appeal, innovate with purpose, but always put the investor at the center. To all our investors, I appeal, stay informed, stay patient, and believe in the long-term promise of disciplined wealth creation. To our corporates, I appeal, let transparency play a role. Sound governance be your message, and commitment to shareholder value be your guiding principle. And to our regulators, I appeal, remain proactive, remain agile, responsive in a world that is defined by rapid change. So, in an era where data is capital and algorithms trade in nanoseconds, which you've already proven as to what is your strength, the human values that build our institutions like BSC, the human values such as trust, resilience, and vision must remain at the core, at no cost. We should forget the people who sat under the banyan tree, who sowed the very seeds for this institution. It is with trust they did it. They wanted a resilient body and vision with which they believe that they can do it. It is that message that we should never forget, and it is your 150 years of journey which underlines those three important values: trust, resilience, and vision. So, to conclude, the story of India is not just about numbers, because we are very big numbers in most of the indicators. It is about trust, it is about transformation, and it is about the countless dreams of our retail investors. Let our capital markets continue to reflect the dynamism needed in our journey towards becoming a Vikasit Bharat, support our nation's ambitions, and inspire future generations of wealth creators and investors. Thank you very much for patiently listening to me.